Okay, start recording. All right, let's do it. Hello everybody. Hopefully I can't believe that everyone is hearing me right now, and I can't believe that okay, you guys are seeing my screen right now. Okay, so briefly before I start, let me quickly go right here. Let's quickly do this. All right, it's right here. Let's go to trading view. Okay, and right here, let's go to the charts. All right, and let's see. So today, what am I sharing today with my viewers? Hopefully today, so sometimes ago we talk about highs and lows. Okay, this the lesson I gave about highs and lows right here, identifying highs and lows. Okay, so today we are looking at what I called market structure trend and short-term trend. Okay, it is very vital that we understand what is a market structure trend and the difference between market structure trends and short-term trend. All right, so what is the difference between market structure trend and short-term trend? Okay, let's get to that. The daily time frame, this is a card CHF. Okay, we're just going to use it for to make the example. All right, quickly before we go into that, let me quickly take out this stuff. Okay, quickly. All right, okay, and just a minute. All right, because we are going to be making use of this. Okay, we are here, card CHF. All right, so back in time, CHF, excuse me guys, sorry about that. Okay, so in my first video I talk about the monthly support and resistance bands on the monthly chart. Right here we can see we're on the monthly, so you can't, if you are new to what you are seeing that I'm doing here right now, all right, you can watch my first video. This is the monthly resistance band, all right, and this is the monthly support band areas. Okay, so those are the first thing we want to do when building our chart. Okay, because for us to be a good analyst on the forex industry, we must make sure that we learn this business in the correct way and apply what we are being taught, and you do the things in the correct way. Yeah, that's what I want to say. So right now we're looking at market structure trend and short-term trend. And what is the difference? First of all, what is market structure trend? Okay, so many of us as beginners that we are, we learn about short-term trend, lower lows, lower high, lower lows, lower high, lower lows, lower high, like that. Now, but one thing that many of us are not taught is that, you see, this short-term trend that we are looking at right here, this short-term trend, it's what creates the market structure. All right, without the short-term trend, okay, this short-term downtrend we are seeing here is what creates the market structure trends. Okay, yes, market structures, excuse me, Julius. market structure trend starts by creating short-term uptrend or short-term downtrend. Okay, so in this scenario, as we can see right here, this is the short-term trend. Okay, first of all, the market is going to make a, lower lows, lower high, lower lows automatically right now. Okay, this is a confirmed short-term downtrend right now. Okay, and then it goes on and lower high, lower lows, and lower high, and it goes on and on like that. Now what I'm going to do here right now is to help us identify better how it all starts. So the market starts by doing this lower lows, lower, little, like this stuff, keep going down and on and on. Sometimes it can even go like sideways like this, sideways like this, and then before you know it, it goes back, it goes to the downside, comes back to retest this area, and from there it goes on down like this, and it keeps going like that and like that and like that. Then all of a sudden you begin to see something like this, and the market start going up and start going up, start going up, and before you know, it start changing direction, it goes up back again, try to play with us, and gradually the market start going all the way to the downside. Okay, and it keeps going like that, and later it start going up again, and even it can, for a period of time it can stay sideways, and bang, and there it goes again. All right, and this is how the market works, short-term downtrend, short-term uptrend. And you guys are going to notice that from what I just did here right now, okay, let me lock it so we don't have these things stopping us. All right, from what I just did right here right now, you guys are going to notice that when I was, by myself, I was making the short-term downtrend and short-term uptrend, short-term downtrend, short-term uptrend. You notice that at this point in time, so this from here is going to be what? It's going to be the market structure extension. In other words, in other vocabulary, is called impulse. Okay, and retracement can also be referred to in another vocabulary as what? As correction. Then we have another extension, and we have another retracement, and we have another extension. Now this, okay, I'm going to change the color to red. All right, now this red line right here is called the market structure. All right, before this red line, without these black lines, okay, without these black lines, it is impossible to get this red line. Okay, that is one thing you guys want to take to heart today, for those of you that are going to be viewing this video or watching this video. Okay, without these black lines, you cannot get this red line. So what do I mean? Simply put, the short-term downtrend is what forms the market structure trend. So if I take, for example, away this red line, previously we're going to have a short-term downtrend and we're going to have a trend line, right? Something like this, for example. Okay, and once the market, okay, breaks that trend line, for some of us that are already, good at spotting market breaking trend lines and all those stuff, that would be what? A signal to buy the market. And this will be what? This is going to be the short-term trend, which is the retracement, the correction, and we also have a trend line, okay, confirming that back in time this was a confirmed short-term uptrend, right? Yes, it was a confirmed short-term uptrend. All right, so the market started going down again, started making lower lows, lower high, lower lows, lower high, lower lows, lower high, and we also have, now at this point in time, what do? Do we take another trend line and draw another trend line like this at this point in time? Well, in my own humble opinion, in the way I have come to learn this business, we don't have to draw another trend line like this. Okay, what we simply need to do at this point in time is just adjust the trend line, the previous trend line. Why do we have to adjust the previous trend line? Why don't we just draw another trend line? Well, we have to adjust the previous trend line, because drawing another trend line would be us just throwing trend lines all over the places. Okay, that would be us throwing trend lines everywhere, and that is not the right way to go about this business. Okay, let's not forget that this is a skill we are trying to acquire. So in order for us to acquire this skill in the correct way, we have to learn in the correct way. Okay, so we can start doing things in the correct way. Okay, now we adjust the trend line, and at the very time we are going to adjust the trend line, it's only when we find out that the market just break this low here. Okay, the moment the market at this point in time makes a new lower low right here, okay, right here, what do? We adjust our trend line, because the market just take out this very important low back in time right here. The market just took it out right here. So therefore, we have to adjust our trend line, because we are beginning to see that this market is beginning to fall to the downside more and more and more and more. All right, so for those that want to short the market, what do? We begin to look for opportunities to sell the market. So this is another opportunity to sell the market. All right, when the market did this at this point in time right here, okay, so we have to look at the highs and the lows to confirm, so we don't make mistake when drawing our trend lines. All right, and we are going to look at the chart properly to see. So if we look at the lows, I mean the highs, yes, I was the one who drew all this line, but if you look at it clearly, you're going to see that one is higher than one. For example, this is high, and this is high, but the highest one is this one. Okay, that is the highest high. So for us to draw the trend line accordingly, we must follow through. Okay, we must follow through. And this was the last touch before the market make the new higher high that is higher than this high. So we must draw the trend line accordingly. And at the end of the day, what did the market do? The market at this point in time broke this counter trend line right here, makes a new lower high, did not make a new lower low. Instead, the market consolidated a little bit, make a double top right here, and follow the way to the downside. But what was the signal to start shorting the market? The signal to start shorting the market was when the market broke this important higher low. Okay, right here we can see the market make a new low at this point in time, lower low. Okay, that is lower than this low here. All right, so what do? How do we sell in this kind of scenario? All right, all we need to do is to take a new counter trend line at this point in time. For aggressive traders, okay, we sell the market at this point in time when the market broke this counter trend line right here. Aggressive traders, this is where we start selling the market based on your strategy. All right, okay, why? Because the market just made a lower low. In other words, the market crowned, which is a chart pattern. Okay, for some of us that know what is called crown, this is a chart pattern. In my own opinion, for me, I'm going to start shorting the market at this level, and my stop loss is going to go above the crown, which is going to be right here, and I'm going to be risking, for example, 142. All right, so stop loss here is going to be 142. All right, okay, this is already more than 142, and this is it. And this is how the market accomplished the mission right here. All right, and that was take profit target right somewhere here. And 7 times out of 10, believe me guys, you are going to find the market doing like this. Okay, but 3 times out of 10, sometimes the market can even, okay, sometimes goes all the way up here, take us out on stop loss, and start falling to the downside. All right, so once the market does that, what do? You don't want to panic. Okay, you don't want to panic. All you just need to do, take your counter trend line again. All right, and better still, you can easily wait. Okay, you can easily wait and know that the market is going to make a new lower low. All right, once the market makes a new lower low, for example, you can either sell the market at this level, or if you are an aggressive trader, you can either sell the market from here, selling bearish candlestick formation. Stop loss goes right here, and you want to target 1-for-2 risk reward ratio, depending on how you trade. So once you enter the market at this point right here, okay, counter trend line break at this level, and that is it, in my own humble opinion. All right, and that's how you make the pips. And if you are targeting, you are entering at this level, it's that simple. Your stop loss want to go at the pattern traded. Okay, your stop loss want to go at the pattern traded previously. And where is the pattern traded before? This was the pattern that has been traded before this one, and you want to risk 1-for-2 risk reward ratio, you know, all the way. And all of these, my friends, okay, all of these, believe me, you're going to see the market playing out. Sometimes it's going to take some time. Okay, you're just going to see the market. Sometimes the market can even wave in between, you know, take a lot of time, wave in between, and finally the market is going to go to your direction. All right, and all of this, my friend, is just knowing when to enter the market. Okay, wait for the market to come to you. All right, then just do your thing. Okay, all because you know what is called market structure trend, and the difference between market structure trend and short-term trend. And as the market keeps falling to the downside, you want to keep adjusting your trend line. Why? Because that trend line is also supporting to tell you that the market is in a confirmed downtrend. And some of you that knows how to use indicators such as the 50 or the 100, 200 EMA or simple moving average, okay, exponential moving average and simple moving average, to help you to see that this market is already falling to the downside. All right, and that is where we have your extension, retracement, extension, retracement, and you have impulse correction, okay, impulse correction and impulse. All right, and that is how you trade the market with ease. Okay, just because you know what you are doing, okay, in the market. You are not just some random guy, you know, just playing around. Well, if you want to play around, it's okay, but then if you're talking about acquiring a skill that's going to help you in the nearest future, okay, to be financially free, okay, you want to take this serious. Very, very important. And believe me, guys, this is how I trade the market. Okay, and as time goes on, you guys are going to see me trading the market real life right here on YouTube with you guys, and I'm going to be doing exactly what I'm sharing with you guys right here on YouTube. All right, so let's quickly check the chart and see some few examples that I've just talked about back in time. Now, what currency pair should we use? All right, so back in time, we can see that the market on the CAD CHF, okay, at a level of support, I mean resistance band area, okay, resistance band area. What happened next? From what we just talked about right now, we can clearly see the market started making lower lows, lower high, lower lows, lower high, lower low. Right here we can clearly see that. Okay, now these lower lows, or better still, let me make use of this one. Okay, let me make this a lighter. Okay, lower lows, lower high, lower lows, lower high, and lower lows right here. All right, and make it black. Okay, now before this market structure, because this is a market structure right now, okay, this is the market structure. So when we talk about retracement or correction, okay, if you see a market that is moving in this scenario, lower lows, lower high, lower lows, lower high, lower lows, okay, let's not get it twisted. Okay, this market could be, okay, this movement, okay, now I'm talking about this movement here, this movement, all right, this movement might be sometimes in different market conditions. Sometimes it can be just a high and a low. Okay, I'm talking about this movement. Okay, when you see that, it doesn't mean it is retracement. So if you're talking about retracement or correction, what you want to see is this: the market must make higher high, higher low, higher high, higher low, higher high. Now I don't know how many times the market is going to make higher highs and higher lows, higher highs. I don't know how many times, but then this is what I refer to as a retracement. Okay, and if it's also the market is going to the like, for example, we are buying the market structure trend X, that means we are buying it to the upside, then we are looking for an opportunity to buy. What we want to do is we want to wait for a retracement, a correction. Okay, in this scenario, so we are seeing the market making a lower low, so we want to see, okay, sorry, not a lower low, market making a higher high, so we want to see lower lows, lower high, lower lows, lower high, lower lows, lower high, lower lows, and extension. Okay, now in this scenario, this is what I refer to as correction or retracement. Okay, the short-term downtrend, I refer to it as what? As retracement or correction. So once the market breaks that counter trend line from that retracement, I want to buy the market, especially once the market makes a previous higher high. All right guys, so the market makes a previous higher high, so this was the previous higher low right here. Okay, this level here. So once the market makes a new higher high right here, I want to start buying the market at this level all the way to the upside, and my stop loss is going to come right down here. All right, and the okay trend line, okay, is confirming that this is what market structure trend right now. All right guys, as we can see right now, this is the retracement. Okay, this is the retracement we have right here. We can see the market at this level making higher highs, higher low, and higher high. So that is the short-term uptrend. Okay, that is what the short-term uptrend. Okay, the short-term uptrend, the correction, and the retracement. And another thing you guys want to take to heart is that extension is always longer than retracement. Okay, impulse is longer than correction. All right, as we can see right here. Okay, so we want to take to heart this information on the smaller time frame, because this is the monthly time frame I'm using to do this example. So in this scenario, this is where, okay, many traders are going to be shorting the market, hopefully on the smaller time frame, counter trend line break, and this is the where you short the market at this level. Okay, and stop loss goes at the pattern traded previously, which is going to be just right here. All right, so that is where the stop loss goes to, and you're going to be risking 1 for 2, not on the monthly time frame, but on the smaller time frame. Okay guys, so this is how you trade the market with ease. It's not easy, but once you know it in the correct way and you do the things you're supposed to do in the correct way, 7 times out of 10 I can assure you that the market is going to go to your direction, and sometimes you're just going to be watching the market with your 2 eyes, and you're just going to see the market play out and you're just like, wow, is this so easy? Actually, it's not easy, but then this is you doing what you're supposed to do at the right time and just let the market do its thing. And sometimes you can even be sleeping, okay, and the market will just play out before you wake up. Sometimes you might even be at your job and the market will play out, and by the time you come back from your work and, oh, let me check the chart, wow, you can just see the market has taken you in on profit. Okay, so this is what I want to share with you guys today, and you can do the same thing on all time frames and at any time with different currency pairs. Alright guys, hope this is beneficial for you. Okay, if you like it, please give it a thumbs up, subscribe to my channel right here on YouTube, and I'll be dropping more of my beautiful content with you guys this 2024. Alright, stay tuned, and hopefully I will be with you maybe next week. Alright, from me to you for now, this is Jayvan FX right on YouTube. Bye bye for now.